Ever feel like the market's playing games with you? Every breakout turns fake, every setup ends in loss. The problem? You're chasing noise. But what if I told you? The simplest line on your chart could be the key to consistency. A line that shows where smart money buys, where amateurs get trapped, and where you could enter before the crowd. This isn't magic. It's trendline trading done right. Stick around, because I'm about to break it down so you'll never look at a chart the same way again.
So this is the trend line on the higher time frame. We have 2 touch points and we're looking at a potentially third confirmed one. You would see we have a previous support maybe turning into resistance, and now we're going to start dropping to the lower time frame. Now we're on the 1 hour, whereas previously we were looking at a 4 hour. And on the lower time frames, you also want to look for trend structure. And you want to look for where are swing highs, where are swing lows, where do you see breakout points. And here it is very clear and very obvious. Here we are hitting the higher trend line. And also, how is the market hitting the higher trend line? You would see the market is stuck in this range. We have our lowest point here. Previous resistance here on the high is turning now into support. So the market is really stuck here in this tight little space. And the way to find a trend following entry is to wait for the market to break out of the pattern. And the breakout pattern is then confirming our trend following entry. Many traders are going to jump on it with a pending order. Some traders prefer a limit order or a market order. So you wait for the confirmed close and the confirmed breakout. I will also show you later how to actually trade a retest approach, which is very common in the markets as well. But a general idea is you want to look for a pattern in the lower time frame, some kind of consolidation, and then on the breakout, you will trade with the trend. And this is what happens. You can see this was our pattern. The market broke out and violently moved lower. And the way you want to look for targets is usually when you look to the left-hand side, you want to look for the most important swing lows and swing highs. They are often used for target placement. So if you want to go short, look left and see where has the market previously turned. So here we had the last swing low. That could have been a very nice target here as well for this example. Another example, on the higher time frame, we are here under 1 hour. We have a great trend line, first touch point, second touch point, and here we're looking at a potentially third touch point. So when the market is hitting the trend line for the third point, what I will do is I start dropping to the lower time frame. I will start looking for support resistance, microstructures. Here you can see we have a previous support level that held previously. It was resistance here. So it seems to make a lot of sense to look for a trend line at this point. And when we drop now to the 15-minute, again, we are able to look for support and resistance. You can see here we have lower time frame support turn into lower time frame resistance on the way down. And whenever we are able to really put our price into such a box, when we're able to define a potential breakout level, then this is where you can start looking for trades. And it's very simple. What you want to do is you want to wait for a confirmed breakout, wait for the market to break out of such a pattern, like it did here, a footer candle close above it. And that can often be a signal. Some traders prefer also to wait for a confirmed break, a retest, which is not always happening, but sometimes I will show you that in a later part when we talk about a trend line pullback strategy. And you can see what happens first is the market hits some resistance here at the previous level. So support turns resistance, turned resistance again. Still, the market made higher lows, so that is good. It's a confirmation that there may be more bullish sentiment building up. As long as the market is not breaking into a new low, we are good here. Potential targets, you could look left again, look for big swing highs and lows and use that for your target placement. And you can see afterwards that's what happened. You can see the market eventually broke this level here, continued to the trend structure higher, kept making higher lows here as well. And then eventually it hit the previous resistance level. There's also huge supply area in here. If you want to learn more about that, check my other videos around supply. And this is how you could then create a target approach. So very nice how we find a higher time frame trend line. we find the higher time frame to a direction, then we drop to the lower time frame, look for patterns, look for breakouts, and then we could style and manage our trades on the lower time frame. All right, so let's talk about trendline breakouts, and I love trading trendline breakouts because they provide you such a great entry price, as we will see. And we want to look for a trendline breakout with a lot of context because we are trading trendline breakouts as trend reversals into a new trend. And what you want to see as a trend context is, for example, previous key levels, a loss of momentum, local structures. So how does it look? First of all, when we zoom out, you can see here's a previous resistance. This resistance led to a strong sell-off in the past. So clearly a very significant lever here. And you can see the market is struggling. So we have our previous key level. We also have the component of loss of momentum. Whereas previously the market was always able to make higher highs very easily. Here the market is struggling. We are not able to make higher highs. Here we had even started to make lower highs. This is very important. At this point, the market still is making higher lows. So we have technically not completely broken the trend structure, but we are not able to break into new highs. We are also able to define a local structure. So we have our trend line here, 1, 2, 3, 4, 5 touch points. Great. We're looking at a confirmed valid trend line. And we're looking for a last swing low. So here's the last swing low. And what happens is that when the market breaks this level, like it did here, what are we looking at now? Now we're looking at a market where we are making lower highs, and the breakout confirms that we are making now a lower low. And this is exactly how downtrending markets evolve, lower lows and lower highs. So this is a very important change in the trend structure. This is the first time in this whole uptrend that the market is able to make a lower low. And on a trendline breakout, what we generally want to do is not only wait for the trend line to be broken, but also wait for the market to break the last swing low. Because as I've shown you, now we are really looking at a complete trend line change and a trend change. And now what we're doing is we drop to a lower time frame to time our trades. And on that lower time frame, what we want to do is we want to look for a pullback. Pullbacks are very common, and especially trend reversal pullbacks. So this is our previous support on the higher time frame, the last swing low that has been broken. And what you would often see is that the market is coming back into such a structure. And previous support is often becoming resistance. And this is a very important feature. Many traders have problems with stop loss. Many traders have problems with break-even stops. When they're in the breakout, they immediately move their stop loss to break even, and then they're being taken out by those pullbacks. So it's very important that you understand that pullbacks are very common, and you need to account for that also in your stop loss trailing approach. Give your trade some time to evolve. Don't suffocate your trade with a too tight of a stop loss approach. And what you often see is that when the market is hitting the previous support as resistance, then you would often see here the continuation to the downside. And you would see that now we have this nice trending structure to the downside. Market is moving in those waves to the downside, lower lows and lower highs. And this is exactly how we're going to use our trendline breakouts and the pullbacks. The best price to short in a downtrending market is at the highest possible price. So when we are looking for a pullback entry, this is the highest point in the downtrending wave. So you can see the market is now making lower lows and lower highs. And we want to enter close to the previous pullback area. So this is the pull at, and this is exactly where we find the best trading opportunities. Still, the downtrading structure is not broken. The market is making lower lows and lower highs. And we are entering at the top of such a trend line wave. So the perfect way to get into a trade, the trend following trade, are those pullbacks are at those confirmation points. So first of all, the first tip is that we always want to make sure we are able to identify the long-term trend. We want to zoom out of our charts and we want to identify, are we in an uptrend? Are we in a downtrend? Because this is determining, are we looking for buying opportunities or selling opportunities? So what we can do is, for example, use the daily moving average. So we are here on the 1 hour chart, but the blue line is the daily moving average. And I showed you in my last video with the moving average tips on actually how to get the daily moving average on your lower time frames. Make sure to check that out in my channel. And what we are seeing here is the market is trading below the moving average and it is very strong downtrending. And what we want to do in a downtrending market is we want to look for trend continuations, which means is we want to look for shorting opportunities. So this is what the flag and the trend line is helping us to do. After the strong trend, we just waited out. When is our first correction wave coming? Then are we able to find a trend line? Yes, we're also able to find the last swing low. And then we are just waiting for the market to break out. We could wait for a breakout. We could wait for a pullback. And then this is what has happened afterwards. So flags are great because flags connect the trends. So a flag is the correction legs and the flag connects the downtrending legs in a downtrend. Here, we are in a long-term uptrend. The market is coming from a downtrend. It topped out. We bottomed out, rather. We have a double bottom. The market started to make higher lows. We're able to use a trend line here on the top and on the bottom to define it as a triangle. And triangles are trend continuations as well, just like flags. And again, what we want to do is we wait for the market to break out of the trend line. And we also want to make sure the market is breaking the last significant swing high. And you can see we have a breakout, we have a retest as well, and we have a later retest here once again. That's why I keep saying in so many of my videos that if you're using a stop loss trailing approach and if you're using a break-even stop loss, give your trade some time because those retests are so common. And I've been trading breakouts and retests for 10 years, way more than 10 years, and pullbacks and retests are becoming more and more frequent. So really make sure that you account for that in your stop loss trailing. There can be great opportunities here as well to time your retest on the lower time frames. And then when do you put your stop loss or where do you look for targets is previous key levels, for example. So you could also use a stop loss training approach. You could use, for example, a Fibonacci for your targets. There are many options. A very objective way is obviously just using previous support and resistance key levels. So now let's make a little bit of a cut actually. And when we look at a trend line, there are different components, obviously. So previously, when we talked about the trend line breakout, we want to look for a trend line that is changing the angle, where the market is going from strong uptrend to weaker uptrend. And now we want to look for exactly the opposite. Now we want to look for a market that goes from a trending market to a much stronger trending market. And in trading, we call this the bump and run pattern. So what you will see is that the market is in a trending phase. We have a great trend line that we could use here for trend line pullbacks, retests, and then suddenly the market is really pulling away from the trend line. And this is what we call the bump. And what you will often see is that this bump suddenly is leading to such a strong trend that the trend becomes unsustainable. So when you see that the market is reaching such a huge level that it's just not sustainable long term, what you will often see is building divergences. For example, you'll see here, this is a triple tap that I talked about in my strategy videos in the past. And this is a price divergence. And this shows you that the momentum is losing. And this is what we are then calling the start of the run. So we have the bump, which is the first initial push. And then we have our run. The run is then where the market is about to collapse and trade into the opposite side because this is just not sustainable. And this is just not how the market can keep going forever. So it's very interesting to look for those trend lines when the market suddenly takes really off vertically away from the trend line. Afterwards, when you see such a exhaustion pattern, a divergence, then often it can be very interesting to trade and to look for those reversals after the bump and run pattern. And that's it for the trendline course. I hope you got something out of it. I compiled the most important tips that I've put together in this trendline video. You can screenshot it, you can use it, print it out, hang it into your wall, and remind yourself on how to draw a trend line. So I hope you enjoyed the video. If you did, make sure to leave a comment below. Make sure to subscribe to the channel so that you get notified about my new videos that are dropping every week. And I want to thank you for the great support. I really appreciate it. I read all the comments, even if I can't reply to all. Thank you so much and happy trading.